morning to all traders and welcome to today's Market Insights video. It is Wednesday the 15th of April today. And I want to look at the Aussie, obviously, because we've had a 20% increase over the past 2-3 weeks, I would say, since, of course, the beginning of this week. We've seen equities continuing to rise as well, okay, as the virus infections are leveling off. The lockdowns will be easing very soon. Toyota, Renault and Volkswagen are thinking about reopening their plants. China, of course, is open again, and Chinese numbers are showing very good data, actually, compared to what we expected. The G7 was successful, and there is going to be an acceleration on the response to COVID-19, specifically the G7, of course, after the G20 also agrees, will going to support the poorest and the poorest countries and the developing countries as well. However, the thing is that the IMF warned that this is going to be the worst contraction since the Great Depression, and they see most of the economies actually contracting at least 5%, shrinking at least 5%, even if we have a V-shaped recovery. That this actually exactly is what it seems to be the case when we look at the charts, right? A V-shaped recovery. Now on the Aussie today, I want to look at this particular scenario over here. I mean, I've been looking at this as an ending triangle, right? Because I'm looking at ABC, 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 right? Which ended right here. But the thing is that for me, due to the longer term structure of this pair, of course, I think that this is going to be a correction to wave 4 in the cycle degree, right? And then from there, we should be looking for price again to move lower. Now, I've marked as wave 4. I mean, we could go up to this descending channel, right? Because at the end of the day, usually when we remain in a bear market or a bull market, we have to remain under a certain trend line to be considered as either, continuation to the downside, let's say, or an invalidation of the current trend. So I'm looking at this to potentially even go up to this current trend line, okay? Now, because I see this as a leading triangle over here, right? 1, 2, excuse me, no, it's an impulse, 1, 2, 3, 4, and 5. It is, I'm marking it as the first wave, A, of the correction, right? So I'm expecting now to see prices moving lower in a 3-wave structure and then move again up, all the way up, and obviously break above the current fresh high at the 64.30 and complete wave 4 in the cycle degree, and from there start looking prices to move lower. Now, we've reached the 161.8 Fibonacci extension of waves 1 and 2. Right? So although, I'm calling this as a 3, 4, and a 5 because wave 3 is bigger than wave 1 anyway, it could be a case where wave 3 is here, right? So we could also go in a elongated sideways market over here since the wave 2 was sharp, and then move all the way up to take out wave 5. And from there, start looking for prices to move lower, right? So for the lower, I'm really looking at to see if price is really going to go below the 63.20 because this is the previous low. If we do, then it could be not a triangle, it could be a deeper correction, then we could still get a 5, right? So I will be looking at the low at the top of the current wave 3, and also, of course, that previous low, which is at 59.88 or so, in order to pretty much understand whether this is a big correction or it is a intermediate wave correction before heading up for wave 5. But whatever the case is, I think I'm standing with an ABC for the time being. The other pair I wanted to look for today is the dollar against the Canadian dollar, okay? Because this one also has been moving. Actually, I mean, we had an incredible rally here to the downside, right? This is the leading triangle, okay? I am seeing, and we talked about this last week, we're expecting prices to break below this previous low, right? This is now a leading triangle with an ending triangle as wave 5, right? a very, very nice pattern. So from here, I'm expecting also that to move higher. We can go up to the 142.50 or so, which is the 50 Fibonacci retracement of this move to the downside. And from there, start moving lower, again in an impulsive move to the downside, right? I mean, it will be a C wave. So that wave has to break below the previous low of 138.50 at the moment, right? We might extend a little bit lower to complete wave A. But since we are on the fifth, on the ending triangle here, we're not going to extend as much as, you know, like a few pips, right? Maybe 10, 20 pips more, and that will be it, right? From there, we should be looking price to move on a 3 correction and then down. What we want to see is prices breaking below previous wave A, and actually that would be the marking of wave C. Now, wave C, how long down is going to go, we don't know. Obviously, we're looking at a few weeks at least down the line anyway. In the short and medium term, short-term intraday, maybe I will be short, maybe the next few days, but for the next week or so and a few weeks, I'm looking for prices to go up to at least 140, then 141, perhaps even 142.50, which is the 50 Fibonacci. It might even go higher. We don't know that. It really depends. It will really depend on how sharp this move to the upside is and what and how deep the correction is going to be. Okay, so this will be for the day. We are expecting, of course, the Bank of Canada to deliver the announcement in terms of interest rates today. And again, the EIA report, which seems to be, of course, influencing the Canadian dollar. So I would keep an eye on that one as well. I will speak to you tomorrow.